Welcome to TradeTheNBI.com. This is John's reports for the 11th of September. Well, Friday ended up with pretty much holding in place. This is that falling DOC orange, and just enough short-term buyers, which is what we were talking about before, that if that continued to press, that would be enough to keep things going. We're not out of the orange between cyan and red, which usually is that continuation, but we're just starting to see that short-term buyer push and that little rise of check out gold. So that should be enough to give it some push, and we could even see the beginnings of a crossover, from the magenta over yellow, which would give us another push back up. Pretty straightforward stuff from there. Likewise from the NQ, a bit stronger because it's already over its 50% range, and you can see the pivot up of all of the key elements. Just not a whole lot of short activity. They're sort of paused at this particular point. What you would look for from a failure correction situation would be a spike back up of the orange at this particular stage would be, kind of catastrophic, because that would really drive price much lower and below the support lines. From a treasury standpoint, of course, people still getting pretty decent yield and holding on to that. There's not going to be any change as long as oil is right up here, these upper 80 range. The longer it goes, the more unlikely it is the Fed's going to change course, because you're going to see that trickle down into end of year inflation numbers and start to really have an even greater impact than it has. I mean, a lot of it's been absorbed, but you're reaching that point where can average consumer really absorb another round of prices on top of the prices that have already moved, and we'll start to see the effects of that. And it's tough because we're going to have to filter through a lot of the bogus data that comes through, but it's going to be hard to hide it eventually, because you just look at labor participation rates and then the amount of full-time workers versus what they try to push in, the number of part-time workers to make up for the fact that you're losing a lot of other regular jobs. From a euro standpoint, we already all know the issues with the euro situation and how, as long as oil's up, it's problematic for it. A little bit of a creep up from a gold standpoint. Gold should really start to catch the movement, but it may take a little bit of build here from that shakeout to get back into the positive zone. Still seeing MBI white spiking, so there's a lot of pressure to keep driving it. But of course, again, you've got that bifurcation situation now where you have the Asian world as well as those under the sanctions versus the rest of the world, and that really creates an interesting split. You're seeing zero interest and joy in the bitcoins, and that we kind of expected to move back towards 0%, which is exactly what we've been seeing last couple of days. Almost a dip of orange below the red, which would be a P2 pivot. That could be the potential for at least some salvation. You're already seeing a higher shakeout on matching lower lows. It's usually a build, particularly with the extreme histogram being in the green category. And from an ETH standpoint, even, it's equivalently the same, reaching towards the 0%. It had that extra spike low that you didn't really see from Bitcoin, but still performing almost identical. Here we have it from an ES50K standpoint. You can see the downturn. This is just a push back up towards that 50% of decline at this particular stage. So kind of a normal effect. Now, whether it'll be able to sustain it and push back up, that's really going to determine from that daily sequence and that. But overall, these are the right readings that you want from a bullish standpoint. So it's performing there. When we look at the intraday from Friday's action, you had the pre-market build up with the positive extremes, as we talked about, and then during the day filled it back in, and at the end of the day pushed it right back up. So just looking to shake out weak hands intraday. And then once the post-market started here from the European session, it's been buy. Everyone's been buying. But as you can see, we got positive extremes around the 45.18, and the earliest one going all the way back down to the 45.16 range. So those are the sell trigger points should that take place. As always, though, look for me on the Skype chat. I will be out for most of the evening, but after that I'll be back in, which my evening is middle of trading activity or just around towards the close portion. As always, trade well. We'll talk in there.